The market's abandoning an entire sector right now, and most investors are completely unaware of what they're overlooking. While everyone's freaking out about AI supposedly destroying traditional software companies, there's a massive opportunity sitting right in front of us. Smart investors are quietly taking positions in names that Wall Street has completely written off. And if you grasp what's actually unfolding beneath the surface, you could be looking at some substantial gains over the coming years. So here's what's really happening. Everyone keeps wondering if AI is going to make software companies irrelevant. Is software as a service finished? The short answer is absolutely not. But the long answer is far more interesting and potentially far more profitable if you know where to focus. AI isn't eliminating software, it's driving an evolution. We're witnessing a transformation from tools that humans manually operate to autonomous systems that execute work for you. Instead of paying for seats and licenses, companies are shifting toward outcome-oriented platforms where AI agents actually deliver results without constant human supervision. That's a fundamental transformation. And the companies adapting to this reality are going to generate enormous value while the market is still trying to understand what just occurred. Now, before we explore these opportunities deeper, make sure you subscribe to Finance Hype because we're monitoring these trends in real time and you don't want to miss the next update when these stocks start moving. Hit that subscribe button and let's continue. Understanding agentic AI. The crucial concept to grasp here is something called agentic AI. This is where AI doesn't simply assist you, it operates autonomously, within defined parameters to complete entire workflows. The software industry is transitioning from passive tools to what some are calling services as software, where the AI delivers the outcome, instead of you manually working through processes, and that shift is creating winners and losers. The companies building infrastructure for this new reality are positioned to excel. One major research firm just released a report indicating most software names have massively underperformed recently, and according to their analysts, software stocks are significantly undervalued right now. So let's discuss two specific opportunities where I believe the market has mispriced the potential. Stock number 1, Rubrik RBRK. First up, let's examine Rubrik, ticker RBRK. This is a cybersecurity play that's getting sold off along with everything else in software, but it absolutely shouldn't be. The simplest way to think about Rubrik is like an unbreakable vault combined with a time machine for your company's entire digital existence. Cyber threats are escalating every single day. Ransomware attacks are more sophisticated, more frequent. And now, with agentic AI entering the picture, the attack surface is expanding in ways most companies aren't even prepared for. Here's what nobody's discussing enough about agentic AI. These autonomous agents can make errors or even get exploited. And when that happens, you need the capability to roll everything back like it never occurred. That's exactly what Rubrik does. When hackers deploy ransomware and lock up your data demanding payment, Rubrik's intelligent backup system lets you restore everything instantly. It automatically saves and replicates your data in a way that attackers simply cannot tamper with. You're essentially purchasing insurance and a recovery mechanism in one package. Rubrik Security Cloud protects everything from on-premise enterprise systems to cloud infrastructure, SaaS applications, unstructured data, and identity providers. It integrates with all the major cybersecurity platforms you're probably already using like Palo Alto Networks, Zscaler, CrowdStrike, and others. Rubrik calls one of their key innovations identity resilience, and this matters because 90% of successful cyber attacks don't involve breaking in, they involve logging in with compromised credentials. So, Rubrik's combining data protection, identity security, and application safeguards into one unified platform. They've also launched something called Rubrik Agent Cloud, which is built specifically to accelerate AI agent adoption. If you're investing in software right now, you absolutely want exposure to companies enabling agentic AI, and Rubrik is positioned right in the middle of that trend. Agent Cloud gives you visibility into what agents you have deployed, what they're doing, what data they're accessing, what identities they're assuming, whether they're operating within the guardrails you set, and most importantly, how to undo damage if an agent goes rogue. You can literally rewind the system like the problem never happened. Rubrik's financial performance now. Let's discuss numbers because growth here is impressive. Cloud annual recurring revenue is up 53% year over year. Non-GAAP gross margins are sitting at 83%, which is exactly what you want to see in a subscription-based software model. Subscription ARR growth has been running at 34% consistently going back to early 2023. Rubrik's using a land and expand strategy, and you can tell it's working because their net dollar retention rate is over 120%. That means existing customers are spending more every year. The number of customers generating over $100,000 in ARR has exploded from just 23 customers to over 2,600. That's exponential growth in high-value accounts. Gross margins have been steadily improving. Forward revenue growth expectations are sitting around 36%, which is very solid now. This company isn't profitable yet, so there's no P ratio to examine. It's trading at about 12 times forward sales, which isn't cheap. But when you compare it to peers in the SaaS space, the EV to next 12 months revenue is around 10 times. And the Rule of 40 metric, which combines growth and profitability margins, is right at 40%. That net dollar retention above 120% is a strong signal. The stock's currently trading around $72. It's up about 12% over the past year, basically flat. There's about 7% short interest, meaning some investors are betting against it at this price. Market cap is just over $15 billion. Wall Street analysts are very bullish, but quantitative models are more cautious, which actually creates an interesting setup. Some of my best investments have come when Wall Street and fundamental analysts say buy, but quants say hold. That usually means sentiment is so negative that the price has gotten too attractive to ignore, assuming the underlying business is solid. Looking at the technical picture, the stock hit $103, dropped to $65, rallied back to $92. And now it's pulling back again. Based on Fibonacci retracement levels, there's support around $63 on the lower end, and the stock's currently sitting right on a key trend line at $72. This IPO'd back in April 2024, so it's still relatively new. I wouldn't want to pay over $75 here. If you're looking at this as a long-term investment, 3 years or more, dollar cost averaging at $75 or below makes sense unless the fundamental story changes. If you're finding value in this breakdown, drop a comment below and let me know what you think about Rubrik, or if you're watching any other software names right now. And don't forget to hit that like button. It genuinely helps more people discover this content. Stock number 2, Snowflake, Snow, Now, let's move to the second stock. And we're sticking with the theme of agentic AI infrastructure. If you've been following market trends, you probably remember back in late 2022 and early 2023 when everyone was talking about Phase 1 AI infrastructure for enterprises. That was all about the picks and shovels companies like NVIDIA building the raw computing power. Then came Phase 2, which was about connecting those large language models to actual enterprise data. Companies like Palantir and MongoDB were plays on that phase. Now we're entering what I believe is Phase 3, and that's agentic AI at scale. And one of the best positioned companies for this next wave is Snowflake. Ticker SNO. Snowflake just started partnering with Palantir, and a major research firm recently upgraded Snowflake with a $300 price target, calling it a good entry point for investors. This is actually the second largest holding in my main portfolio, so I already own it. But let me explain why I think there's still significant upside from here. Snowflake enables customers to scale generative AI applications, and that's exactly what you want exposure to right now. You want to be invested in software companies that are enabling customers to deploy and scale agentic AI solutions. Snowflake recently integrated its AI data cloud with Palantir's Foundry and artificial intelligence platform. And this partnership lets customers quickly develop and deploy agentic generative AI solutions across their organizations. Snowflake Intelligence is bringing agentic AI directly to the enterprise level. More than 1,000 Snowflake customers have already used Snowflake Intelligence to deploy over 15,000 AI agents across their businesses. And that number is growing fast. This is helping enterprises democratize access to their data and empowering users to deploy agentic AI at scale so they can actually drive measurable ROI from their AI investments. Companies like ServiceNow, Palantir, and Snowflake are going to be the big winners in this next phase of AI infrastructure build-out. Snowflake's business model and performance. One important thing to understand about Snowflake is that it's not traditional software as a service. It's consumption-based, meaning customers pay for what they use. Revenue growth is strong, sitting at 27% forward growth. Valuation-wise, there's no GAAP PE because the company's still investing heavily in growth, but the non-GAAP PE is 192, which is expensive. However, you need to look at cloud metrics and SaaS-specific valuation measures. Snowflake is actually the cheapest it's been since going public 5 years ago when you look at EV to next 12 months revenue, which is sitting at 14.3 times. The Rule of 40 is at 50%, which is solid, and net dollar retention is 125%. Now, this is absolutely a stock that could go lower in the short term. Just at the end of 2024, the stock dipped below $110 per share, which was an incredible buying opportunity. It then ripped up to $284, pulled back to $211, and now it needs to break above $235 to see further upside toward that $305 resistance level. I genuinely think Snowflake hits $300 in 2026. Before we wrap up, take a second and share this video with anyone you know who's looking for quality software plays in this market. The more people understand what's actually happening with AI and software, the better decisions we all make. Conclusion. So let's bring this together. The market's treating software stocks like they're obsolete. But the reality is we're in the middle of a massive shift toward agentic AI, and the companies building the infrastructure for this transition are setting up for enormous growth. Rubrik is solving a critical problem in cybersecurity and data resilience that is only going to get more important as AI agents proliferate across enterprises. Snowflake is enabling the next generation of AI applications at scale with partnerships and technology that position it right at the center of this trend. Both of these stocks have been beaten down along with the broader software sell-off, and that's creating opportunity for investors who understand the underlying business models and where the industry is heading. Rubrik at $75 or below is a multi-year hold with massive upside potential, especially as enterprises wake up to the security risks around agentic AI. Snowflake breaking above $235 could run toward $300, and longer term, this is a foundational piece of enterprise AI infrastructure. The key takeaway here is, don't get caught up in the noise about AI killing software. AI is transforming software, and the companies adapting to deliver autonomous, outcome-driven solutions are going to dominate the next decade. If you're building a portfolio for the future, these are the types of names you want exposure to. Make sure you do your own research, understand your risk tolerance, and position size appropriately. But these two stocks represent compelling opportunities in a sector that's currently being thrown away by the market. That's Finance Hype, and I'll see you in the next one.